Thank you all for joining our webinar today. We have a joint webinar with Holistiplan and Income Lab. So we'll give everybody just a little bit of time to get entered into the webinar. I see you all rolling in. So we're looking forward to this 3-part series with Holistiplan and Income Lab partnered as a educational series for you all. So I'll just give everybody just a few more seconds and we'll get rolling. This is a 45-minute webinar, so we will have a couple demos and some from each side of the house, and then a collaboration conversation, and then we'll have Q&A at the end. With that, when you add your questions to the Q&A in Zoom here, if you want to hear the question answered, please like the question because we will be limited on time. So the ones with the most upvotes will be addressed live. We will also address remaining questions outside of the webinar. On top of that, this is a 3-part series. So we will be having a second webinar in Q2 of 2024. And then the third one we will let you know as well. So just keep your eyes and ears peeled for the second part of this webinar series. So with that, I will pass it over to Justin and he will get started.
Hello, everybody. I'm Justin Fitzpatrick from Income Lab. I run our research and development. Very involved on the product side, and I'm really happy to be joined by Torie Happe from Holistiplan on this first joint webinar. Hello, Torie. Thanks for being here.
Hi. Yeah, thanks for having me. I'm excited to get this series started.
Definitely. So I think in talking with the advisors and firms that use Income Lab, I am not sure there is another piece of software that comes up more often than Holistiplan. And I know a lot of advisors are really interested in how advisors who use both applications, how they use them together, what kind of the workflows and the interaction between those pieces are. And maybe there's actually a decent number of people who either just use Income Lab or just use Holistiplan who might be curious about, well, why are we even doing a joint webinar together in the first place? What is it that each application sort of adds to the toolbox, the advisor toolbox, and how they can work well together? So I know you have a lot of thoughts on that. I do too, and that's what we're going to be covering today. But before we get into that, I think it might make sense since there are shockingly still advisors who do not use Holistiplan or do not use Income Lab, doing just a quick kind of demo overview of what these applications are about, just to set the groundwork. So why don't I turn it over to you to walk us through a little bit about Holistiplan.
Yeah, so Holistiplan is a tax planning solution for financial advisors to use with their clients. We're not here to replace your overall financial planning tool. We're more of like a bolt-on service to that. So think of us as a tactical tool in that toolbox that you have of technology in your book of business. So what we do is allow the advisor to take the client's return, upload it into our system, and then we do a great analysis of that. So as I'm chatting that through, I'll start sharing my screen here. And so we should be able to see my dashboard. If you don't see that, just type in the quicks into the Q&A, but I think my screen's green, so it should be good to go. So what we do here is you would go into the household screen. You have 2 options. You have the ability to add a household. So you would create a name down here or just go straight to the upload. So maybe this is a brand new client. You're just really wanting to quickly upload that return. You can click that button. I've already created a household, so I'm going to scroll down to this client. The Joneses, I know, very original in their naming, but got to keep it simple. So we've created the household here. I've uploaded their return, but if I hadn't, you'd hit this upload return button. You can choose the tax year that return is from. So you can go up to 5 years. So this box will quickly change come to January 1, because we'll boot out 2018 and slide everything over to the left here. So you can go up to 5 years. I don't recommend you really needing to upload or collect 5 years of returns if you're just starting out. But if you do have that information and you feel like entering it in for your client, you have the ability to do that. So you'd click the year that the return you have, you would drag and drop or click upload. And then you hit the upload button. In about 45 seconds, you're going to have an uploaded return, and it's going to create this tax report for you. So this is where the tax tax planning conversation really starts. So this is what the client's return did for them the previous year. I really love this key figures box because if you go nothing further than this, you at least have a great conversation starter with your clients. So this is just the nuts and bolts of what their return was, their total income, the deductions that they had, their total taxable income, their filing status, all of that just basic data that you have on that return is up here for you to go over. And if you want to keep drilling down, that's where the rest of this report comes in, right? So this report is going to show you the marginal tax bracket information, modified adjusted growth income tiers. It's going to tell you if the client is over or under all these planning opportunities, and you could just hover over them to see if it's red, by how much, if it's green, by how much. It's going to highlight for you the brackets that your client falls into and tells you exactly their dollar value of where they're landing. You can see that these boxes, you can kind of change the layout here, so you can move them. You can click the I to hide them if you didn't want to go over that specific box with them. We tackle Medicare Part B and D premiums for you, so you're going to see the Magi threshold and where they land, how much their adjustments are going to be, that kind of thing. Their Schedule D cap gains and losses are going to be listed here for you, the right-hand side. I really love this Schedule B income source box because it kind of shows you some random accounts that the client may have. You may not have known that they had a Fidelity account with $10,000. The client may not have known that they had a Fidelity account with $10,000. This could have been a really old 401k rollover that got stuck somewhere. I know when I plugged in my return into the system when I first started out at Holistiplan, we found 2 401ks that I didn't roll over. So they were just sitting there doing nothing. So it was really kind of a cool like treasure hunt of finding things, not just for myself, but for your clients as well. And then as you get down to the bottom of this is where the tax planning kind of piece of the software starts. So these are these observations that are going to come up for your clients. Each one of these observations is going to be different. So mine are going to be different than Justin's and everyone else on this call, right? Because all of our returns look different. So these observations are going to come up. You have the option to hide them if you didn't want to talk about it with your client. You have the option to hit this pencil and write some notes about this observation you went over with the client. We have this great integration with FP Pathfinder, so it gives you related sources and extra material in case you don't feel confident in that observation. What can I learn about? Dive deeper in. So as you're going through these, again, this is really where that tax planning piece starts, right? You're going to start opening up that conversation with the client. So you're going to go through these with them. And if they live in a state like California that has state income taxes, we are able to pull some state tax hints for you. Now, we only upload individual federal returns currently. So this is just based off their federal return. We do not upload the state return, but based off the federal, we can pull some information for you. So they do live in a state that has state income taxes, you will have this box. But if you live in a non-income state, don't think that the system is broken because there is no state tax hints for you to go over. And at the bottom here, you're able to write in just general observation notes. So say one of these observations for your client was a Roth conversion may be an option for the client to go over. Where you would start the tax planning option or showing them the different tax planning needs that the client has is in our scenario analysis tool. Our scenario analysis tool is like a big giant calculator, right? This is where you're going to be able to start planning out different tax planning solutions for your client. So think about this as your financial plan piece when you're in a financial planning tool. and you're building out different model portfolios for the client to go over. That's exactly what this is doing, but based off their tax planning needs. So scenario 1 is always going to be the tax data from the tax year that you've uploaded. And here I've built out the scenario 2. So how you do that is you click the button right here. It says add scenario. You can create from a blank one, load up a new tax return, or copy from a scenario. Your best bet here is to copy from a scenario because nobody probably wants to input all this data. I mean, maybe if you like to sit there and type, you'd want to enter in all this data alone, but I would highly suggest hitting the copy from scenario. So what it's going to do is copy paste it into the next column here, and then you're off to the races. One button I love to show is this solve for max button. I want to make sure that I have deleted out my Roth conversion that I was working through. So I'm going to take out this model conversion so you guys can see the full effect of that solve for max button. So what this is going to do is quickly identify how much the client has left in their next, in the tax bracket that they're in until they bump to the new one. So as you can see, this client has $109,000 and change to stay in their current tax bracket. Now, you're probably thinking, why is that important? Well, there could be different tax options that if the client bumps into the next tax bracket, it actually helps them because it gives them a bigger tax window. It also allows you to understand how much more the client can go in this particular tax bracket before they flip over into the new bracket and, potentially have a higher tax payment that they're going to have to make. So when you're taking that down into consideration, and for this Roth conversion, we have these cool worksheets. Again, there's all different worksheets in here. I just chose a Roth conversion because it's a big topic of conversation with a lot of advisors these days. So going to hit that little pen and pencil. You're going to say, I want to convert 85,000. I know these numbers aren't huge, but it'll get the point across here. So you're going to see, it's going to tell you the used income is 80,000. The cost of that Roth conversion is about $20,000 and change. We also have these great Roth explainers. I think if I bump this out, it may not show it, but it breaks down the ability to tell the advisor and client exactly how much that Roth conversion is going to cost and why it costs that much. So the explainers are great to understand the cost behind the Roth conversion. So once we have that Roth conversion plugged in, you're going to hit close, and then you can go back up for this solve for max button. And now you can see the effective rate is now $24,000 and change. One last thing I want to show you before I kind of pass the baton over is at the bottom of this. Now, this client lives in California, right? So they've got state income taxes that they need to take advantage to take into consideration. We have state tax options, so you're able to model out different states for the client. So again, this client lives in California, but what if they were making a move? What if they were moving from California to Florida? And how does that affect their tax bracket? Well, Florida, we all know, is a non-income state. So that client could potentially be getting back a percentage or a large percentage of their total income. You may be working with clients that aren't in the state that you live in. So this also helps you align with their clients. So you can understand better, their state tax needs. So again, you can build out several hundred scenarios per client. We don't necessarily cap that number, just so you can, model out, again, maybe the Roth conversion makes sense. Maybe this is a younger couple and they got married and they're having a baby, and, all of those different life things that are going to come up. You can model that out for the client. We also offer these scenario recipe cards. So it's all of the most frequently asked, how do I model questions? So in this case, I clicked on donor advice fund, and it gives you the step-by-step instructions here on the right-hand side to build out that scenario for the client. So once this piece is kind of done, you're going to take this data, you're able to kind of print these out for them. So you can print out the scenario analysis for your client. You're able to print out the tax report for the client. The client then is going to take that data and information back to their tax preparer and say, hey, look, this is what my advisor and I have gone over for my tax planning needs for 2024. And so now you kind of have this great relationship with their tax preparer as well. And now you, the advisor, also can take this information into their financial plan. So they are going to do this Roth conversion, and you can now plan for that in their financial plan and model portfolios and that kind of stuff. So I'm going to kick it back over to the Income Lab team to kind of show you the second half of the demos.
Before we do that, we just had one quick question pop up that I
Yeah.
figured I could quickly answer. If multiple year tax returns are uploaded, is there an additional year-over-year analysis that is done?
There is not. It just basically pulls into the household section here, and you'll be able to see the year-over-year tax reports built out. So you'll see this one's 2022. They'll just be built out different reports down here, but there's not like a layout of 2018, 2019, 2020. It would just be each report under that tax return section. Great question.
Okay, Justin.
Thank
you,
you,
Torie.
Torie. Yeah, that
Yeah.
was really great. And I think you'll see kind of the theme that'll come out in our conversation about how to use these two tools together is really how both Income Lab and Holistiplan do some really fantastic tax analysis, but we're sort of hitting different ends of the planning, I guess time scale would be a way to look at it. So you just saw the incredible detail that Holistiplan goes into in terms of near-term tactical planning. Income Lab, on the other hand, is a much more of a long-term retirement income management platform. So this is about helping clients understand how much they can spend, how they're going to fund that spending, and what could lead to changes in that spending over time, and doing tax analysis with that long-term strategic vision in mind to try to get a feel for what the best strategies, the most optimal strategies could be for a client, and present the client with some idea of what the value of certain planning decisions could be. So I'll give you an overview of what we do at Income Lab, and then we'll return to this idea of how the tax planning done with each piece of software kind of complements each other. So as I mentioned, Income Lab is very retirement focused, and you'll see that we approach the question of how much I can spend and how I'm going to fund that in retirement fairly differently from what you would see in kind of a generalized planning platform. So you won't see probabilities of success and failure here. The way I like to describe that is once you're in retirement, it's sort of like you're in a car on a road trip or something. You want to know turn by turn directions at that point. So if I asked how do I get to Torie's house to my Google Maps, and it said 80% probability you'll get there in time, that's not answering the question I asked. I asked, how do I get there? And so that's what Income Lab is all about. So here's a household, just an example household, where we've already entered all of the resources that they're going to use to fund their retirement. We can see those resources. The most important one to most people is their balance, but they have other resources. For example, they have some rental income, which is already underway. They have Social Security for Jack that's starting very soon, and then Mary in 2028. I can also see all of these resources and all of the interacting pieces of their plan in what we call Life Hub. So this is a way for a client to see their entire financial life all in one place at any level of detail. So this is obviously the highest level detail. This is 30,000 feet. I can get into some further categories, see where my assets are, see in each year of the plan how much of my spending I'm funding from different income sources. And I can even get down all the way to the very final items. I can see how much of Jack's Social Security is coming this year. I can see when Mary's starts and so on. And like I said, this is a long-term strategic vision. So it's not just about this year or next year. It's about years into the future and all of the interactions of RMDs and Social Security taxation and so on. So this is a view that I know a lot of people really enjoy going over with their clients, and that clients really love. Advisors also tell us it's a great way to do discovery with clients, because you're kind of automatically incentivized to fill this out as much as possible. People want to see the tree with a lot of leaves on it and these numbers being accurate. We'll get to this later, but if you did have a Roth conversion plan, you would also see those Roth conversions here in the app. It loads. Sometimes it, oh yeah. Back to, yeah, there we go. For some reason, sometimes when Zoom is sharing it, it takes a second. Okay, so for example, I can see my Roth conversions here all the way down to the account level. This goes a long way to helping clients really understand, okay, I'm gonna be able to spend this much in retirement, but how exactly are we gonna do that? And where's the money gonna come from? Where are the funds gonna move from one place to another? And then we can actually see that, how it changes, over time. Getting back to the main plan dashboard, as I said, we are a retirement income planning and management platform. And so not only do we help clients figure out how much they can spend, but we also help you figure out what a good fit for clients would be for that spending level. Because in our working years, we kind of know how much we can spend. We just spend less than you make. But if you're in retirement, it's not so obvious. And there's not a single answer for what, every set of resources can actually, it can fund a little bit of a range of spending. So we help you explore with clients a reasonable range of spending. Maybe these clients have more than enough resources and they don't spend that much compared to their resources. So they can afford to target a lower spending level and have a nice big buffer before they would have to consider tightening their belt, right? So we'll have them spend 16.7, or they may, want to spend more now when they're young and healthy. Maybe they have a little bit higher risk tolerance, so they can imagine pulling back from that level if they really have to. Okay, we can spend more, and if we lose 22% in our portfolio, that at that point we would have to make an adjustment. Whereas again, if I spent less, it'd be closer to a 30% buffer. So this is about helping clients understand what is sort of obviously a trade-off. Yeah, you can spend more, but you'll be taking on higher risk that'll be too much and you'll have to pull back. Just one more piece to demonstrate what I'm talking about in terms of adjustments to income. So you can take a given plan and run it through an actual historical scenario, whether that's global financial crisis, the dot-com bubble, stagflation, and see how this plan would adjust if it encountered those returns and inflation. And you can see here, for example, that in stagflation, which is one of the worst times in history to have retired, you got a slight pay increase early on, and then by 1982, after a whole lot of inflation and sideways markets, you finally got a pay cut and had to spend a little bit below the level you had hoped to spend. In this case, $300 less per month. You can see how those guardrails develop over time. So let's go back to the global financial crisis, since we all remember that pretty well. This plan never quite got a pay cut in 2008, 2009, but a lot of plans would if they were a little bit more aggressive. But this helps clients understand, hey, as time goes on, we're going to learn about the world you're living through. Your plan is going to change. At the very least, it's getting shorter, right? But you're starting Social Security, your portfolio withdrawals are changing, and so on. So your guardrails are changing over time. And I'm going to let you know, as your guide through retirement, when it would be prudent to make an adjustment. So this is not, set it and forget it, success failure planning. It's about ongoing guidance. Now, part of that guidance is tax guidance. So I think, Torie, you've said before that, tax planning is a year-long sport. We believe the same thing, and not just year-long, but actually lifelong. And so one thing, once you have a plan where, the guardrails make sense for clients, the spending level makes sense for clients, and so on, the next step people typically take is to take a plan, take it to our tax center, and ask, how should I source withdrawals from this plan, and should I consider Roth conversions? The software will automatically take that entire plan. So this plan was, 25, 30 years long, and estimate in each year, given the actual cash flows that we're expecting in those years, Social Security and so on. And it will run a variety of different ways of sourcing withdrawals, and then give you a high level plan long analysis of the value of pursuing one or another approaches. That could be pro rata, which is just a proportional withdrawals. It could be taxable, tax deferred, tax free, or it could even be Roth conversions up to a particular federal tax bracket. For example, here it's telling me that it looks like the 24% tax bracket could be a good focus for me because it provides the highest total net income of these approaches. If you're more interested in net legacy or something else, you can certainly use those statistics to guide you here. There's also some art to this. So sometimes people just don't have the stomach for a really big Roth conversion. So maybe you bump it down to 22 or 12. But let's look at the 24% bracket. So it's looking like we can save over the life of the plan, over $600,000, cut our tax rate from 13.6 to 6.5 effective rate over time. But what we're doing there is, we're ripping the Band-Aid off. We're spending a lot in taxes early on in exchange for long-term control of taxation. And that's going to require that we live for a certain amount of time for there to be a break even for the current clients. Now, if they are focused on legacy and their heirs are in a high tax bracket, the break even for the heirs may be earlier than this. But this gives you a good way to show, hey, there's no free lunch, but for you, living in this case 18 plus years could provide a lot of good value here.
And I think too, with our Roth explainers, overlaying that with that piece of your software is really great for the client, right? Because our Roth explainer is going to show them dollar for dollar, like the breakdown of what that's going to cost them for the next tax year, where this is like, showing them over the course of many years. But if they were to implement it, how much would that cost them the next year? It's kind of a great, like, zoom in, zoom out piece of information for the client.
That's right. Yeah. And I've heard it described that way as kind of again, like you'll use Income Lab to look at the entire plan that includes things like timing of certain cash flows and so on. And then you might say, well, 24 looks really good. We've done our analysis. There is sort of a last mile piece here, which is, we'll give you estimates on, how everything stacks up inside of brackets and so on. But I know from talking with advisors, they will typically then go to Holistiplan and say, yeah, okay, but Income Lab is making some assumptions on, dividend levels and so on. Let's really dive in and make sure that we've captured every little piece, including all of those, credits and deductions and things like that. So yeah, maybe this would be a good time to sort of dive in before we take some questions on how we have heard clients or advisors use both pieces together. I was really intrigued by some of the pieces that you have that could, like you said, kind of help you zoom in. Also the explainers and things, right? So maybe you've decided, well, that the math tells me 24%. How do I really, take this to a client? So you might use the explainers. And like I said, you might also take these high level strategic estimates and dial it into something that you'd want to, kind of take to the tax planner.
Yeah, and I think too, it's important to show, again, we can talk in percentages all day long. I think too, like showing the client like dollar for dollar what it costs them is really important, because 24% or whatever may not sound like a huge drastic thing, but when you actually break it out by like what that ultimately like dollar value is going to cost them is really important and more impactful. So like saying 20% or $27,000, like 24% doesn't sound super scary, but when you say $27,000 to a client, their eyes make it really, really big, right? So being able to not only show them the, the zoomed out effect overall arching plan, but to be able to hone in and say, hey, look, like this is actually, this is what it will cost you if you were to do this in 2024. Is that something you're able to stomach? Is this something that is within your reach for the next 12 months? Yes, we have the bigger picture, blown out, and you can see the graph that you're going to make it. And, your break even point is 18 years from now, but honing in for 2024, is that something that feels, comfortable for you?
Yeah, I think that's a really good point. That, I mean, it is super valuable to do long-term strategic planning, but all of our actions are done right now. And sometimes, like you said, does it feel comfortable? That is actually a consideration, because people may have particular ideas about maybe where tax rates might go and so on. And of course, they don't know the future, but they might have some strong opinions about it. Or like I said, I mean, maybe doing in this case, $360,000 Roth conversion is it's just beyond their appetite. And being able to, look at, okay, is that a whole lot worse? Income Lab will give you a long-term view of that, and Holistiplan can help you understand, okay, what exactly am I looking at here in terms of my additional taxes this year?
Yeah, and you could almost like say, okay, your ultimate goal is a $250,000 Roth conversion. How do we break that up to make it more appeasing for you year after year, right? So you guys can show the overall, hey, this is, you could do this big thing, and we're here to say, that's great. How do we get you there? How do we get you there with what you have currently today? And being able to kind of use our scenario analysis tool, use that solve for max button, showing them, okay, you're not going to change your tax bracket. You're not going to up until X amount of dollars. Your Roth explainer is going to show you how much it's going to cost, the breakdown of that cost. Is that more appeasing to you to break it up, in smaller values than, one lump sum at a time?
Right. So maybe we should look at sort of how advisors use each piece of software kind of over time. So I just went through the sort of, okay, you're designing long-term plans, as you can see, or you can do scenario analysis where, maybe you're retiring earlier or later, or Social Security earlier or later, or Roth conversions or without, right? So you've done all that, you've chosen a plan, you've done the Roth conversion analysis. In Income Lab, typically then you'll set the plan up to be kind of automatically updated each month. And in January, or really anytime thereafter, that's sort of the time at which you'd reevaluate your long-term tax strategy. For Holistiplan, how do advisors typically, what's sort of the I don't know, the life cycle of
tax planning? Yeah, so typically, we are rolling into what we can consider like tax planning season, right? So your clients are going to quickly start getting their W-2s by the end of January. By the end of January, everyone is starting to file their taxes, and most, some clients who are early bird gets the worm and gets those suckers in like super fast, they're going to already have their returns back to them February, March. But we know that the drop dead deadline is about April 15th, 16th, depending on, the way the date falls on the weekend, right? So we all know tax day is about April 15th. So anytime after that, all of your clients should have their tax returns in hand. So many advisors basically create April and May as like their tax planning months when they think about like, how am I going to have conversations with my clients? What emails am I going to send out? What data points do I need to be collecting from my clients? So they kind of set it up where I'm going to ask for those returns in April and May from my clients. And then they kind of do the return, so then they're ready for their mid-year review, right? So you're probably going to do mid-year reviews May, June, July-ish, depending on like your calendar. So then you've got that return, you've got that data, and you're able to build out their tax planning needs. Then on the other flip of the coin, if you've got clients that deferred till October, you're going to be able to kind of catch those people at the end of October, November, December. And then you're able to go back to your clients that you did the mid-year review in June and say, hey, have there been any huge new changes? Yes or no. So that when you're doing the end of the year plan for them, you kind of know, okay, we can kind of plan on 2024. You know, talk to your company, you're getting a giant raise. How are we going to take that into effect? Oh, you are having a baby in 2024. Congratulations. What does that look like for you? Oh, you did decide to get married. Great. You know, are you going to file jointly or still file separately? You know, have those conversations at the end of the year. So that's how we've been seeing seeing advisors really start to implement tax planning. And it makes it really simple because we all know tax planning season is, you know, April-ish up till April, and then the end of the year. So it really helps the advisor kind of stay in line. And then, you know, if they start, you know, really building upon that, they kind of take it throughout the whole year.
That makes sense. So yeah, these actually work really well together because like I said, maybe you have a plan that you've implemented on Income Lab. Starting in January, you're going to see a new tax analysis already created for you. Because like I said, we'll just update the plan. Beginning of every month, we bring in new data from integrations, or we'll project how your portfolios have developed. We know what's happened with inflation and so on. We know new tax rates and thresholds and so on, right? So that's a good time. And then any time after that, now you know, like, okay, again, does 24 still look good? Does it 22? And then as soon as you get the tax return, now you can take that tactical step of, okay,
Yep.
you're going to do 22 this year. And if so, what, right? And then go through that whole discussion again. So they really, you know, kind of work well together in that way, the workflows. Yep. Taylor, I know we're down to 8 minutes left here and we've got a few questions, so maybe we can take some of those.
Yeah, I know there's going to be a burning question that is, how does Income Lab integrate with Holistiplan?
So currently there is not a true like defined integration, right? We don't have a connection between the two platforms. Not saying that that's never going to come, but currently it's not there. But what we wanted to show today is how you use them as essentially like Legos, connecting them together and bridge that gap. So currently there is not like a true defined integration, but today I hope we kind of showed you how you can use both platforms as a Lego bricks stacked on top of each other.
The other three were back to Justin's demo. So Justin, I don't know if you want to cover these afterwards or cover them in this session. You have access to them. Do you want to just take a peek at them?
Yeah, I mean, these are pretty straightforward. So I know there was one comment in here, I think, about the how exactly do I do this piece, which I think was referring to this kind of the down to the account level. And like I said, even with, you know, with Roth conversions, being able to show people all the way down. I guess I could share there's another view of this as well, a couple other views of this as well. For example, you know, showing all the flows into the income side and then back out of the expense side. Some of you might be, it can be a little confusing for some people to see the surplus. It's basically saying, well, you could spend 33,000, or you sort of haven't decided how you're spending this 33,000 yet. And you can also see just the cash flows themselves here. So that's a good way to do it. The other question was on the returns, because, you know, we're projecting out, there's a lot of meat on that question. You can certainly set your own return assumptions, capital market assumptions, and so on. You know, for example, here we're we're using kind of a 60-40 portfolio, which using these assumptions is at 5.8% net of inflation. So those are all adjustable. And then the last one was about RMDs. If you explore a plan, it was automatically showing me here that Roth conversion strategy, which eliminates RMDs. But if I switch it to taxable, tax deferred, then tax free, I'm definitely going to get some RMDs, not early on because I haven't hit them yet, but they begin in 2031 for these folks. And so this can actually be really useful as well, kind of along what Torie was saying, for looking at for this year, here's, one thing we could do, another thing we could do. I like that scenario analysis. This is more like strategy analysis and comparison. Okay, why might the 24% bracket Roth conversion strategy help? Well, one is without it, I have RMDs, which could get quite high over time. Another piece is taxability of Social Security. So we can see here that those numbers are relatively high, more like in the 85% range because of the RMDs. But if I shift it to, back to a Roth conversion strategy, now my taxable Social Security is much lower, and a lot of it is tax-free. So you're able to kind of answer the question, well, where's this value coming from? In this case, it's coming from those two things. RMDs not kicking me into higher tax brackets, and the taxability of Social Security staying low.
There are a couple questions about integrations. And the first one, I believe it doesn't say whether it's Holistiplan or Income Lab, but maybe we can just talk about that in general. They are wanting to know about integrations with eMoney, Money Guide Pro, or Right Capital. Torie, I don't know if you want to go first.
Yeah, so currently Holistiplan is integrated with CRM's Redtail and Wealthbox. So we've started there, and we'll quickly be adding to that list in 2024. But currently it's just CRM's Redtail, Wealthbox, and I will throw out that we have Salesforce, but it's more of a beta user. So if you do have Salesforce and you wanted to try it out, just know that you would be part of the beta group for that one.
Yeah, integrations are definitely the name of the game over here as well. So we have focused historically more on custodians and portfolio reporting tools, as well as we do have Redtail and Nitrogen and some others, because we want to allow people to take advantage of those automated updates. And the best way to get data is to get actual live data, overnight data. So someone asked, do we have to put these things in manually? If you have integrations, you don't. And month by month, we're going to project, even the ones that don't come in from integrations, we'll project how they've gone based on your target allocation. And then you can just reconcile those values when you get to, a time when you need to meet with a client or something. And we are working on some new integrations that are coming out in January, for example, with Precise FP, which will help you pull in some data, that you've gathered in other ways. I think that'll be really, really nice. And so there's a variety of ways you can kind of run your data strategy with Income Lab to get the data in there.
And for both of us, I believe so, Torie, our integrations that we do have available are listed on our website. So if you want to look at more details on both of those, we did just also integrate with Altruist. So that's another one we just added this month, or maybe November. They're blending together. We have about 2 minutes left. Any last words for Justin or Torie? We do have one more question, Justin, on Income Lab's data or age assumptions. We can answer that afterwards or now.
Yeah, I mean, you can there's a lot of great ways to set plan lengths. You can, we have mortality tables that guide you toward correct, reasonable plan lengths, or you can set, extraordinary dates of death if somebody has a, chronic illness, things like that. So that's all handleable. No, in closing, I would just say, I think for Q2, we're hoping to have some advisors who use both software to really give you some tested some real cases of how they do this. And I'll just repeat what I've heard from so many advisors, which is these two pieces of software work really well together. There are not currently integrations, as Torie said, but that actually does not seem to stop anyone from using the two together.
Yeah, I appreciate you guys having me on. I love what Income Labs is building over there. And I think, advisors have been singing praises for both softwares and how to use them together. So that I'm really excited to keep going with this webinar series. Like Justin mentioned, if you are currently a user of both, please reach out. My DMs on Twitter or LinkedIn are open, and we would love to talk to you for our next kind of breakout that we're going to be doing together.
Also, there is a survey at the end. So if you are interested in signing up with Holistiplan or Income Lab, we can guide that as well. So yeah.
Perfect.
Thank you
Thank
all
you,
for
everyone.
joining.
Thank you, Torie.
Thank you.
See y'all soon.
Bye.